Sorry. Dear students and working accountants, welcome to my Expert Tally Prime YouTube channel. My name is Babu Rao. Today, in this video, we are going to discuss about the accounting for accounting by composition dealers. So before entering into the topic, we a request to you, everyone visiting my channel and watching my videos, please don't forget to subscribe to my channel and also click the bell icon next to the subscribe button and select all so that you will get notification for all the videos which I upload in my channel, and also share my channel with all others. And another important thing is, please everyone watch the video till the end, every video till the end. Don't skip in the middle. If you skip in the middle, you will understand the topic or subject up to that point only. The balance you cannot understand, you will not know. That means it will be like half knowledge. It is a waste of time, nothing more than that. Okay, so please watch every video till the end, and also watch more than once also every video. You will get a very good knowledge, and also you practice or work out the examples or illustration shown in the video many number of times, so that you will get, if you practice many number of times, more than once, twice, thrice or four times, if you practice more number of times, you will get expert knowledge relating to that topic. Okay, and now and after watching the video till the end, if the video is good, please like the video. If you like the video, YouTube people will share the video to many people, so that many people can watch this video and they can learn the topic. Now we will enter into the subject or our topic today. So here, so far I already we discussed, in the case of registration, when every person registering under the, that is according to the threshold minimum, the limit or threshold limit of the turnover, everyone has to get registration under the GST. So while getting the registration under the GST, there are two schemes. One is regular scheme, another one is composition scheme. So far we discussed everything about the regular scheme. Under the regular scheme, the businesses will be of three types: traders, manufacturers, manufacturers, and service providers. So we have we discussed everything, how these regular people, they will maintain the books of account, how they make the entries. And the second type of the registration is composition scheme. So what the person who is the undertaking, who is using the composition scheme, who is registered under the composition scheme, is called composition dealer or composition taxable person. Regular dealer is also called regular taxable person. We call it as dealer. And also the person registered under composition scheme is called composition dealer or composition taxable person. First of all, we will learn about the the regulations, about the regulations or rules and regulations relating to the composition dealer accounting. So that we can learn in the first part. In the second part, we can take up the accounting treatment, how these composition dealers or composition tax persons, how they maintain the books of account, how they record the transactions in the books. Okay, first of all, see, composition scheme is meant for only small businesses only. So they actually, for the registration, either regular or composition, the minimum, the threshold limit is 40 lakhs and 20 lakhs depending on the state. 40 lakhs if in the Andhra is only 40 lakhs if the dealer is undertaking, I mean, in the case of only goods. In the case of, in case there is service also, only service or goods and services, then the limit is 20 lakhs. In Telangana, it is 20 lakhs. In India, the central government increased it to made it 40 lakhs in many states. Okay, so that is the minimum turnover required for registration is to be done. And when the registration is made for the small business, means the maximum, in the case of regular scheme, there is no maximum cap or maximum limit for the business. But in the case of the second one, composition scheme, there is maximum limit. If that turnover is within that limit, they can take up, they can use, they can register, they can use, they can become, they can be composition dealers. If the limit is crossed, so they will become, they will have to change to or shift to regular scheme. So here the limit is for this scheme, there are the states are divided into two categories: normal category states and special category states. Special category states means mostly northeastern states like Assam, Arunachal Pradesh, Sikkim, Manipur, Meghalaya, Mizoram, Uttarakhand, Himachal Pradesh, Nagaland, Tripura, etc. So these states are special category states. All other states are called normal category states. So in the case of normal category states, the maximum limit for this, the maximum cap, maximum limit for the composition scheme is 1.4 per annum, 1.5 crore. In the case of special category states, the limit is 75 lakhs. So if the turnover crosses these limits, they will have to convert into, they have to take up, they have to change to normal. I mean, so they have changed to regular scheme. So up to this limit, so up to 1.5 crore or up to 500 lakhs, it is not compulsory that you must be in composition scheme. It is optional. If you want, irrespective of this limit, you can register, you can take up the regular scheme, or up to this 10 you have the option. If you want, you can take up the composition scheme. So if you want not composition scheme, if you are normal scheme, that is regular scheme, you can take up. It is optional to take up composition scheme up to this limit. Okay. And then if you take up this limit, that is, if you take up this composition scheme, what are the restrictions? What are the restrictions? And in the case of regular scheme, there are no restrictions. But there are restrictions means not restriction, actually obligations. They have to maintain books of account, stock registers, everything they have to maintain. But in this case, there are some restrictions for some restrictions, some advantages also there. So restrictions are this this composition scheme or composition taxable persons or composition dealers, they cannot make interstate sales. That is, they cannot sell in other states. Only intrastate or local state sales are allowed. That means a composition dealer can sell in his own state only. He cannot sell in another state. But when you are purchasing, he can purchase from anywhere. So sales only in the same state, but purchases can make this composition dealer can make the purchases in any state. And then he cannot. And one more thing is, so when he is selling in the same state, purchasing from any state, when he is selling in the same state, he can sell, but he cannot collect the GST, irrespective of the whatever the rate of the goods, rate of the GST rate for the goods. There may be 5%, 10, 12%, 28%, 0%, 28%, or 18%, whatever the rate may be, he cannot collect GST on the outward sales. But if there's not collecting the tax, so but tax is to be paid to the government. The government will not leave without tax. That is why he cannot collect the tax, but he has to pay the tax to the government from his own packet at a very small percentage, at a small rate, not like 28% goods, 28%, 18%. He need not pay. He has to pay at a small, that rate we will learn now, at a small rate, at the rate of a small amount. He has to pay to the government from his own pocket. So he cannot collect anything, but he has to pay from his pocket from the sales made. So when he is selling, cannot collect the tax, but he has to pay from his pocket. And also when he is purchasing from any state, so the other person, that is the seller, he may be a regular person. If he is a regular person from other state and from the same state, regular person, composition person, unregistered person, anybody will be there. So you are purchasing from anyone. In the case of a regular purchase from a regular person, that person will charge tax in his invoice. So we have to pay the tax to him. So when he is purchasing the goods, he has to pay the tax. He has to pay the tax to the other person. Other person will collect. That's we are selling. We are not purchasing. We are not collecting the tax. But the other person who is selling to us, we are purchasing from that person, a regular person, he will collect the tax. That means we have to pay the tax. But when you are paying the tax, so you are not collecting, not paying to the government. We are paying from his pocket, from your pocket, very small amount. That is why we are not collecting and paying. That is why the amount which you are paying on the purchases, that is inward supplies, you cannot claim input tax credit. You are not collecting and paying to government. That is why when you are paying the tax on the purchases, you cannot you cannot claim the input tax credit. That means he can purchase from anywhere but sell in his own state only. He cannot collect the tax from his pocket. He has to pay on the purchases. He cannot claim the ITC. That means he can purchase from anywhere, but he cannot claim the ITC. He can sell in his own state only, but he cannot collect the tax. He has to pay the tax at a small percentage from his pocket. Okay. And then, so when he is selling the goods, he is not collecting the tax. Only supplying the goods. That's all. He is not collecting the tax. That is why he is issuing the bill. That bill he can issue not tax invoice. He cannot issue tax. He is not collecting the tax. He cannot issue tax invoice, but the bill which he is issuing is called as bill of supply. Just supplying the goods. That's all. So it is called as bill of supply. So he can issue only bill of supply with the details of the goods sold. No tax will be there. That is why tax invoice he cannot issue. So he cannot issue tax invoice, but only bill of supply he can issue. And one more thing is, when issuing the bill of supply, so on the heading will be, in the case of tax invoice, the heading will be tax invoice. In this case, that heading will be bill of supply. Below that bill of supply, name of the bill of supply, he has to mention. He cannot collect the tax. That's why he has to mention that word. He is composition taxable payer. That is why he has to mention composition taxable person not eligible to collect tax on supplies. That we will see in the problems. So not eligible to collect tax on supplies. That is, the other person who is purchasing goods from this taxable composition person, he has to know that he is a composition person, so he need not pay tax. But otherwise, he will issue the bill. He will say, the rate is 28%, but I have to pay from my pocket. So you please pay the tax. So he can collect the tax from him. That is why to make the buyer aware that he cannot collect tax, that is to be mentioned on the bills. That is below the name of this bill of supply. He has to mention composition taxable person not eligible to collect tax on supplies. Please say on supplies. That is one thing. And one more thing is, since he is a composition dealer or composition tax person, on every board, so in the case of his business, on the boards, the name boards and everything, he has to mention the GST number. So GST number for regular or composition, everything. Registration means registered dealer, both regular and composition. Registration number will be the same. First two state digits, then PAN card 10 numbers, then entity code 1 digit entity code, numeric digit entity code, then Z, what is called is this, that number Z will be compulsory, it will be there, and then last digit will be either alphabet or number. It will be checksum code. That is the number for both regular as well as composition dealer also. So he has to mention the number everywhere. So below that number, he has to mention this. He is composition dealer. Composition dealer or composition taxable person should be mentioned on every board, books of account, books of business, and every place of business. He has many branches also. Every place of business, he has to mention the number, and below the number, he has to mention composition dealer or composition taxable person. Okay. So here, when you are selling, he is not collecting the tax. So from his pocket, he is paying. But when you are from his pocket, he is paying the tax at a small rate. But when he is purchasing, at the actual rate of the goods, according to the act, 18%, 28%, whatever the rate may be, according to that rate, the other person will collect from us. So that the tax on the purchases at that particular rate, we have to pay him to the buyer, I mean, to the seller, to the supplier, we have to pay. But we cannot collect, we cannot take it, I can get it back, or we cannot claim the, you cannot claim input tax credit, you cannot claim. Then what is good? That means that tax paid, purchases we are making, goods value, and the tax also we are paying, but tax we will enter the tax, but we have to treat the tax paid as expense. It is not all duties and tax, because collecting tax and paying tax both are called as duties and taxes. But we have to create the tax. We have to enter the tax. The tax should be created under ordinary expenses like indirect expenses, not under I mean duties and taxes. It is to be treated as indirect expense. So in the case of normal, I mean regular persons, the taxable value different and the tax is different. That will be, we will get it back in the shape of, I mean, ITC. But here we are not getting ITC. That is why we have to create it as indirect expense, and the tax paid, he will collect and he will pay to the government. But from our books, if the tax paid is to be treated as expense, it is to be added to the purchase price. So taxable value, tax, and invoice price you will give. So when you, in our books, the tax we will pay, we will enter the tax, but we have to make a setting. The tax paid should be added to the purchase price of the goods, so that the total invoice value including tax will be the treated as the purchase price. On that purchase price including tax, we calculate some profit we add and we will sell to the buyers. We will sell. That means that is the tax we paid to them is increased to added to the purchase price. That is why we are selling over and above that. That is why the tax paid, we will get it back from selling that. That is why from selling that we are not getting that. We are not collecting the tax. We are paying from our pocket. So this tax paid on purchases will be added to the purchase value by setting. We have to make a setting so that that will not be posted to the, actually when you make purchase account debit and GST also debit. But now you debit the GST, but it will be added to the purchase price. So GST ledger, so nothing will be posted. GST ledger will not be debited. It will be added to the purchase price. Okay, this is by a setting we have to make. These are the restrictions and advantage of this is, so this is meant for small business. This is a composition limits one less than 1.5 crore. Others will be hundreds thousands of crores, but it is only 1.5 crore. That means it is for small businesses only with small turnover of 1.5 lakh, 1.5 crore. For in the special category states, it is only 75 lakhs. Okay, and then next one is so in this case of the regular dealer, we need not maintain any books of accounts and all these things. So we have to pay from our pocket on the sales. That's why. So when you are selling and we are not collecting anything, paying from our pocket. So every month we need not file a return. Regular persons, they return every month 2 returns, 1 and 3B. So 2 returns into 12 months means 24 returns he has to file, and 2 returns file, that is annual returns, 9 and 9C. Totally 26 returns the regular dealer has to file. But in this is the composition dealer, composition business is meant for small business. Since the small business, he need not file the tax, file the return every month. See, if you need not file the return every month, but he has to file a statement only, not return. A statement every 3 months, that is quarterly, he has to file a statement relating to the turnover, only turnover, that is relating to the sales, mentioning the sales, he has to file a statement every quarter, that is April, May, June quarter. So after that quarter, he has to file the what you call statement called as GST CMP 08. CMP means composition. So GST, under GST is paying. So GST CMP 08, he has to file quarterly one statement of sales or statement of turnover. Yes, that means yearly he will file only 4 CMP 08 statements. Only 4 statements he will file for the whole year. Regular 24. Composition only 4 he has to file. That is also only a statement he has to file. And then along with the statement every quarter, so the total amount of sale or turnover during that quarter will be mentioned in the statement. So on the total turnover of the 3 months, he has to pay the tax at a particular percentage, that we will come to that later. So at a particular very small percentage, he has to pay the tax. So file the CMP 08 statement and make the payment of the this is called composition tax, because composition is paying regular person regular tax. This is composition tax, means at a small percentage from his pocket. It is called as composition tax. He has to show CMP 08 statement He has to file quarterly, make the money. First to make the money, payment of money. When you are filing the return, that is filing the statement, first in the during filling, after filling up the statement, there will be one option, generate Jalan. So I have to generate Jalan depending on the turnover at the particular rate. What is the total tax payable? That tax, that is CGST and HGST only. So it is divided into two parts, CGST and HGST, half CGST and half HGST. These two amounts we have to make the payment. At the time I make the payment, after making the payment we have to file the return same at the same time. When I'm filling up the return, we have to make the payment first, then file the return. Okay, this is about CMC 08 quarterly. So every quarter one time one statement, that means four statements for the whole year. And he has to file like other regular dealers also. This composer has to file a annual return also. That annual, it is called as return. This is only statement CMP 08, and this is annual return. This is called as GSTR, just like one GSTR 4. GST 4 is the return payable filed by the composition annually. This annual return is to be filed. I will dates. I will tell you. This is to be filed once in a year. Totally 4 quarters, 4 statements, CMP 08s plus one annual return. Only totally he will file 4 statements and one return. Totally 5 filings he has to make during there. What is the due date? So this CMP 08 filed every quarter he has to file. That is filed. The date is after completing the quarter. Next month 13th. Sorry, next month 18th is the due date for the CMP 08. April, May, June quarter. For that quarter, he has to file in July by 18th. That is before 18th of July, he has to file for the first quarter, April, May, June. For July, August, September, October 18th. October, November, December, January 18th. January, February, March, April 18th is the last date for filing CMP 08. And after completing the financial year, that is after 31st March, if 18th April is filing the CMP 08 for the last quarter. Okay. And in the April, he has to file by 30th April. It was the rule from the beginning. From the beginning, the annual return is to be filed on 30th, before 30th of August, 30th of April. But in the case of regular dealers, after completing the financial year 31st March, next financial year 31st December is the file date, last date for filing the annual return. But in this case, April March completed, and April 18th CMP 08 of the fourth quarter, and April 30 was the last date for filing the return, that is annual return CSR 4. But you see, April 18th is filing the CMP 08, then only little time, and also for year ending, the person will be busy. That is why what it is now, some few months back, it is increased to June 30th. So GSTR 04 is to be filed not by April 30, to be filed by June 30, May, June, April 30, May 30, June 30, 2 months it is extended. So now the last date is for filing the GSTR 4 is April 30 after the financial year. And then what is the rate payable? See here, CMP 08 is filing and is paying the tax. And the tax is payable on the turnover. And what is the rate to be paid? See here, for the purpose of the rate, these business people, our composition dealers, are divided into 3 types. Actually, 4 types. 4 types they divided. One is traders, manufacturers, and then restaurant owners, and then service providers. Totally four types divided. That actually the traders and manufacturers have come together. Previously, traders separate, manufacturers separate, and restaurant separate, and service providers were not there. That is added now. So totally 4 types. But now these two are combined together. Traders and manufacturers both are treated as same. Traders and manufacturers have to pay on the sales of yet 1% on taxable goods only. So he will be selling taxable goods. Now, non-taxable means nil-rated, exempted goods will be sold, but only on the sale of taxable goods only. On the sale of only taxable goods, traders or manufacturers have to pay tax at the rate of 1% from his pocket. From his pocket. Okay, so 1% on the taxable goods he has to pay from his pocket. Suppose if the trader or manufacturer are supplying the goods, in addition to the goods, they are giving some service also. For example, vehicle showroom, they are selling the goods, okay, but they will give provide services also, repairing, free services, and after that paid services, repairing, everything they will be doing. So they are giving services also. Similarly, manufacturers, Tata, I mean, what you call Tata vehicles, as well as Bajaj company people also will give services. So trader or manufacturer is providing services also in addition to the sale of goods. And then if the the service given, the service value given, the service amount, what is the amount of service, value of service given is not more than 10% of the total turnover. That is turnover of goods. From the on the turnover of goods, if the service giver are not more than 10% or not more than 1% and not more than 5 lakhs, not more than 10% and not more than the 5 lakhs on the turnover of goods. That is taxable turnover you are making. On the turnover, if the service is given as not more than 10% and also not more than 10% and also not more than 5%, then these treated as trader and manufacturer. Under this category, he has to pay 1% only. He has to pay 1% only on the taxable goods and services which are not more than 10% of the turnover and also not more than 5 lakhs. So in such case, 1% only. Suppose if this trader and manufacturer are giving services also, and but their services are more than 10% or more than 5 lakhs, more than 1% or more than 5 lakhs, anything more than 10% or more than 5 lakhs also. In such a case, he cannot be treated as a trader and manufacturer at 1%, but he is treated as a separately as service provider. Separately as service provider. In that case, this 1% is not applicable like trader and manufacturer. The same person, he will be treated as service provider for the services. For the sale of goods, 1% on taxable goods only, but for the services, he cannot claim as trader or manufacturer at 1%. He has to take separately, he will be treated as service provider. So he's not a trader or manufacturer, directly service provider. So he's okay, he's giving only services, no goods are selling. So in such case, he will be taken as service provider. In the case of service provider, the total turnover, this is on taxable goods, but in the case of services, total services or total gross receipts. Total service means some services may be exempt, some nil rated, but in addition to not exempt or nil rated, total sales taxable, taxable or nil rated or exempted and are called as gross receipts of the service. He has to pay at 6%. In this category, if less than 10% or not more than 5 lakhs, 1% like trader or manufacturer, and the same trader or manufacturer, different person is giving services. Is not a trader or manufacturer, definitely you will be a service provider. With this trader or manufacturer, if the service increases this limit, then he will be a service provider. He has to pay 6% on total turnover or gross receipts, and but his turnover or gross receipts limited to 50 lakhs only. So you can get 10% of this turnover or 5 lakhs. Okay, the 5 lakhs. But here the limit will be 50 lakhs only. So if the turnover of service turnover or gross receipts are limited to 50 lakhs, he has to pay 6%. If he is more than 50 lakhs, in such a case, the service provider cannot be a composition taxable person. He has to become a regular tax person, taxable person. He's called as regular taxable person. This is the thing. And so 1, 2, this is 3. And another one is restaurants. So restaurants not supplying liquor, any that is restaurants supplying only food items, not liquor. So bar and restaurant, they supply food, they supply liquor also, but the restaurants supplying liquor, they cannot be, where they are supplying liquor, they cannot become composition dealers. They cannot take up composition scheme. Only restaurants not supplying liquor, they can get, they can take this, they can register under composition scheme. They have to pay 5% of the total turnover. So restaurants and service providers, they have to pay on total turnover, not taxable value. These two only on taxable goods. These two are on total turnover. So restaurants, but not supplying liquor, 5% of total turnover. Service providers, 6% of total turnover. But for the service providers, the limit is 50 lakhs. For this trader, manufacturer, restaurant, for all these, the limit is 1.5 crore. In the case of normal states, in the case of special categories, 75 lakhs for these people. For this service provider, only 50 lakhs is not 75 lakhs or 1.5 crore. Anywhere, his limit is 50 lakhs only. Okay. And another thing is advantage. Not required to maintain stock registers or books of accounts. You need not maintain all the books of accounts, stock register. That means you need not have any accountant or also thing. The one itself from the bill book, he can see what is the total sales. He can note down that amount he can pay. So take the turnover and he can pay. He need not, suppose if you want, he can write the books of, he can write what is the sale today, what is the sale today. So every day he can write down the sales at the month end, total sales, what is the total sale amount, he can pay the tax. So no need to maintain any stock registers or any books of account. These are all the advantages of the composition dealers. So this is the late date is CMP 0818 of next month for any month, and yearly ones GSTR 4 annual return by June 30th after completing the financial year. And these are the tax rates of the trader and manufacturer. 1%. If he is giving service also, less than 10% of the turnover and less than 5 lakhs, then he can pay under this category 1%. If it crosses this, you can be a separate service provider, or any person not trader or any other person also giving service, he has to register under this 6% of total turnover or gross he has to pay, but the limit is 50 lakhs. Okay. For other people, these other people, limit is 1.5 crore or 75 lakhs depending on the state. And then these are all the restrictions and advantages. And then there are some non-eligibility. Who are not eligible for this scheme? We understand from that discussion itself, we can understand. First one, turnover above 1.5 crore or 50 lakhs or 75 lakhs or 50 lakhs. So trader or manufacturer restaurants, one of these two. This 50 lakhs is for the service provider. So above this turnover, for service, this is for service providers, this is for other people. So turnover above this limit, he is not eligible for composition scheme, and he cannot collect the GST on sales or outward supplies. GST at the above rates is to be paid from the own funds. That is also when are paying, it is treated as indirect expenses. That GST, CGST has to pay, he has to create the account. But the CGST and HGST will be treated as indirect expenses. And when are purchasing also, we are paying CGST, HGST. We maintain the account. CGST and HGST we will enter, but that will be added to the purchase price. Okay. And that purchase price it will be added. So in the CGST and HGST account, there will be no debit, no ITC will be available. But this amount we paid as tax, that will be entered in that will be debited in the GST and HGST, CGST, but that will be paid as an indirect expense. So that is not shown under duties and taxes in the balance sheet. It will be shown in the profit and loss account on debit side as indirect, along with other indirect expenses. This CGST and HGST will be shown as indirect expenses in the P&L account. The purchase paid on purchases, that is added to the purchase price. That's all. And then dealer making interstate supplies, dealers making interstate supplies. So every compositor has to supply sale goods in his state only. If the dealer making interstate supplies, he is not eligible. Only intrastate sales or local sales are allowed. But purchases can be made from any state. Purchase can be made from any state, but sales will be only interstate. That means intrastate only allowed local sales. Interstate sales means not allowed. Interstate sales means that person is not eligible. And also, any dealers, they are supplying ice creams, pan masala, tobacco products, and another one is fly ash bricks. Fly ash, that is bricks made with fly ash used in the construction. Those people also, they cannot, that they can take it as. So these people, the persons dealing with supplying these items, they cannot register under composition scheme. They can be registered under regular scheme only. And another one, these are all other people. This is persons supplying this thing. Another one is casual taxable persons and non-resident taxable persons. Casual taxable persons means persons Indian citizens, the persons from India only, but they do the business for some time on some occasions, like festivals, like exhibitions, like that. some occasions, they will do the business for some time. For example, there is exhibition going on. So in that they provide the stalls. So they will do the business for some time, and after that they will close that. They are called as casually they will do business. Casual, they're not permanent business. It is only casual. It's called as casual taxable persons, and also non-resident taxable persons. The same thing. Persons of foreign country, persons from foreign countries, they don't have any business in India. They don't have any place of business. Just simply they come to India. They set up business temporarily for some time. They will do the business. After that time, they will close down the business and they will go back. So these people cannot become composition dealers, but they have to register doing business. They have to register under regular scheme. But in the regular scheme, like other Indians, it is registration is not permanent. They can make registration temporarily for some time. So the registration will be granted under regular scheme for 3 months, that is quarter, for 6 months, for 1 year, like that. For certain period, they will allow that this, they will give the registration. These people will get the registration for a particular period only, 3 months, 6 months, like that period. And during that period, you will file the returns and make the payment of taxes and everything. They will make returns every month and they will make the payment of taxes and they will close the business. These persons also cannot become because if they have composition, they has to pay quarterly. They will do business for 2 months. They will close off. How they will pay? That is why these taxable persons, composition, I'm sorry, uh, casual taxable persons and non-resident taxable persons, they cannot register under composition scheme. Okay. Another one is dealers supplying through ECO. So dealers supplying through ECO means some dealers they want to get registration, but they are selling from their own. It's okay. If many dealers they will be selling through ECO, e-commerce operators. That is, they have electronic commerce operators. So they are called as Swiggy, Zomato, food items, and Flipkart, Amazon. They are all supplying the goods and giving food items, goods, and some Ola and Uber. They are giving services of transport of passengers. So all these people are called as electronic commerce operators. If any dealer supplying the goods or services through the e-commerce operator, then they cannot register under, the dealers cannot register under composition scheme. It was the rule, but now they are eligible to register under composition scheme also. Now they are allowed. Previously, they are not allowed, they are not eligible, but now they are eligible. Okay. So this is called as that everything relating to the composition dealers, the rules of the rules under the GST Act. And now, how these composition dealers are out compositional taxable persons? These composition dealers, they maintain the books of account. How they make the entries in the books? So accounting by composition, how they will make the books. So these problems, how they are making the entries, that we will take up in the another next part. And but how they is what I told you, they will make the entries everything same. But the thing is, when they are purchasing the goods, they will create and maintain, they will create and enter the CG and GST. But that CG and GST, if purchase are debited, CG and GST also debited. But this is when it is debited means it is input tax credit. Okay, debit means input tax credit, but it is debited. But that we will not get input tax credit. That is why, even though we are debiting the GST, CGST, SGST, IGST also, anywhere we can purchase. So IGST, if they are debiting these, they will debit them, but they will be added to the purchase price. That means in the GST ledger, there will be no amount. So we are debiting the GST ledger, but it will be added to the purchase price. The purchase price will show more. Purchase price will not show only taxable value. Purchase account will show, ledger will show the total amount including the tax. That is, this is added to the purchase price that we have to make the for the GST. For the GST, we have to make a setting to add to the purchase price. But everything same. And when you are selling, the goods, so the taxable person, I mean composition dealer, is not eligible to collect the tax. That is why in the when you are selling the goods, we will not collect the tax, so no tax will be calculated. Even if you select CGST, SGST, amount will not be calculated, but we have to pay CGST and SGST at 1% means 0.5% CGST and 0.5% SGST. That is to be paid. So it is to CGST is to be paid and SGST is paid. So in that case, that is why in that case we will create them in the beginning. So for purchasing time also, we are creating them as we are adding to the purchases. That is why this tax is not treated as we are not collecting and not paying. So it is not treated as duties and taxes. The GST is will be created under indirect expenses. So purchase that indirect expense that will be added to the purchases when you sell that, and on that for calculating 1% that will be paid to the government in the GST. That is CG and SGST will be paid. It will be there in the GST account, but it is created as indirect expense only, not duties and taxes. That is why it is shown in the profit and loss account on the debit side. Just like other indirect expenses, this GST and GST paid is also that is paid from our packet. That is why it is also treated as indirect expense. It will be shown in the profit and loss account on the debit side. That's all. And at the end of the quarter, so the total amount of turnover in that on taxable goods, data and manufacturing, taxable goods during these 3 months, so that your report will show. So on that, we'll calculate 1% tax, that is 50%, 0.5 CGST and 0.5 GST that will be paid to the government after the 3 months, that is after the quarter. Next month, before 18th, we will file the CMP 08. At that time, we will pay the tax also, and that will be shown in the profit and loss account. Generally, when you are collecting and making the payments, ITC as well as liability, everything will be shown in the balance sheet on the liability side under duties and taxes. But now we are creating under indirect expenses. So purchase tax will be added to the purchases, and on the sales, we are not collecting. From our packet, we are paying. That is also taken as indirect expense. It will be shown in the profit and loss account as expenses in the profit and loss account. Then we have to make the payment. Okay. So this is about the accounting. Other items, everything, other setting the rate, everything, we will take a discuss tomorrow. How to make the entries and what are the procedure, what is the steps to be followed. That we will take up in the second part that will be taken tomorrow. So with that, I am closing this session, and did see once or more. You can see that notes shown in that. You can see and you can read it. You can understand about the composition dealers accounting. So this is theory rules relating to taxable error. In the next part, accounting of the taxable dealer, that is composition dealer. Okay, with this I close. All the best.